I'm smiling because, they had the potential to have a very big gap, and instead they get a one-tick gap. If you look at the monthly chart, this was a gap up on the monthly chart, and it was a gap up on the weekly chart, and a gap up on the daily chart. Whenever a gap is small like this, especially late in a trend, it's almost certainly going to be an exhaustion gap, and it closed in the first few seconds of trading today. So there is no gap on the higher time frame charts. Monthly chart, extremely climactic. This is now the 12th month where every low is at or above the low of the prior bar, and that's extreme. And therefore the odds are either that this month will trade below last month's low, or that next month will trade below this month's low. Last month's low was around 24.44, and that is about, 70 points below where we are. And because we traded above last month's high, this month might be an outside down month. I know you look at it now and say, Al, that's crazy. It's not crazy, right? We had an outside up month here after a bear month, and we had an outside up month here. And this is so overbought that we're not likely to go up very much without starting to go sideways. I've been saying that the trend is very strongly up, and even if we do pull back, the odds are high that it'll be a bull flag. So, we might pull back for 1, 2, or 3 months, starting this month or next month, but the odds are that this is the monthly chart. The odds are the best the bears get is something like this. That does not mean we'll get this after the pullback. I don't think we will. I think we're probably going to start to go sideways for many months, 6 months or a year. I think we're going to trade down soon. I think we'll trade up, but I think the move down will not be big, and I think the move up will not be big, and that will probably start to go sideways like this for 6 months. Weekly chart last week outside up, but this is now, I've lost count, 46 weeks without touching the 20-week exponential moving average. We got to within a half point here, but did not get there. And this is so unusual. It's only happened once in 18 years. And when that happened back in 2003, over here, 50 weeks without touching the average price. It got close a couple times. This is what followed. About 10 months in a tight range. The range was about 10% from top to bottom. And I don't know if we'll go 10 months in a tight range this time, but I think we'll probably go 6 months in a tight range. And a 10% correction within that range from the top to the bottom. I think it's a reasonable objective. So I think we'll go at least 5% down, maybe 10% down, and sideways for a lot of months. Friday, trading range here after a rally. We're trying to get trend resumption up, but this is also a trading range late in a bull trend. And it's probably going to be the final bull flag, which means that we're probably not going to go all that much higher before we get pulled back down to this trading range. Different ways to draw a top of a channel. We're already, just a little bit above that. And we can also draw a channel this way as well. and therefore we're trying to get a bull break up on a bull channel. And that usually fails within about 5 bars. Even though we're slightly above it here, I'll still use that. Anyway, it usually fails within about 5 bars on the highest time frame that has the channel. And since the channel is over several days, let me look at a higher time frame. 15-minute chart. '60-minute chart. The legs are not all that big on the 60-minute chart, so maybe on the 15-minute chart, within 5 bars of breaking above the top of the channel, we should get a reversal down. Not into a bear trend, but toward the bottom end of the channel. Different ways to draw it. It's becoming increasingly steep. Back to the 5-minute chart. So, reasonable goal would be the bottom of the channel, which right now is around the moving average. Final flag, a magnet. I don't know if you read my blog over the weekend. I think October is going to be a reversal month. And there are 2 obvious ways it could come. The 2 most common ways are: 1, it rallies strongly and then reverses and creates a bear reversal bar. I don't see any good examples like this. Like that. That's a bear reversal bar. It goes up, it goes down, closes below the midpoint, and has a bear body. This is a good one, but it's in a tight range, and therefore not much to reverse. And then another way it can reverse is a 2-bar reversal. Instead of going much above last month's high, we just trade down and close near last month's low. And that's a 2-bar reversal. And you can see this is similar to what we have so far. We're around last month's high. And if we reverse down all month, we can get an outside down bar. That's what I was talking about a few minutes ago. And, that is a type of a reversal. So this month I'm expecting either this, not getting much above last month's high and closing near the low of the month, or going above last month's high and then reversing down and closing near the low of the month. But if it just keeps going up, I'm not going to argue. We've been extremely strongly bullish, and to say that this month is the month that it reverses, it's not a high probability bet. I'm just saying that 11 months with every low at or above the prior low, now 12 months, that is so unusual that the odds now favor a pullback. So I think it's more likely than not that either this month or next month will trade below the low of the prior month. Right now, last month was so strong and its low is fairly far below. It's probably not likely that we'll get there, but it's likely that if we do not get there, this month will be some kind of a reversal bar like the 2 I just showed. First bar of the day, we gapped up, the gap closed by a tick, and the bar was a doji bar. Second bar of the day, we're 4 minutes into the bar, it's another doji bar. And that tells you that there's not much energy in the market, and that it's similar to most of yesterday's trading. Yesterday we finished always in long, but a lot of really small bars. So not a strong buy up here and no reason to sell. So better, I think, to wait. Channel 1, 2, 3, 4. This is the 5th day in the channel. Good looking outside up bar, but the prior 3 bars were dojis. A lot of traders do not want to buy high. We may go a little bit higher, but probably not much higher. Obviously, if we start to get consecutive big bull bars closing on their highs, traders will start buying on highs, but that's not likely. All right, finished doing my typing. So what's going on here? All right, monthly chart on the left strongly up. The bulls want another strong month, and therefore they want the low of the month to come early. So they would love this to be the low of the month. But look at the past 3 months. All have tails below. That means that at some point in the month, probably early in the month, there was a sell-off. And that increases the chances that there'll be some kind of a sell-off early in this month. And I said the bears will try to get some kind of a reversal month, either a 2-bar reversal, which means we turn down from around last month's high, which is right here. So in other words, an early high of the day and then a sell-off for the rest of the month. And the sell-off is not going to be straight down, right? But it may have a couple big bear days. In any case, the bears want an early high of the month, and therefore they're going to try to stop the month from, they're going to try to stop today from rallying strongly. Alternatively, if the bulls win and we do get a strong early rally, the bears then would try to create a reversal month, a reversal bar on the monthly chart. So if we rally 20 points, 30 points, the bears then would try to force the bulls to take profits and try to get the month to close on its low. So right now the month is deciding, is it going to rally and then close back around where we are now? Or is this early rally going to fail and then we just sell off and close near the low of the month? And obviously, alternatively, the bulls wanted to close above its midpoint like it has for the past 11 months and certainly close above the low of the prior month. Right now, small bars, a continuation of yesterday's or Friday's small trading, and it increases the chances that today's not going to go very far up or down. Because of what I said, if this doesn't go up pretty soon, the bulls will begin to wonder if this will be an outside down month on the monthly chart, and they may just stop buying, and the bears might sell aggressively. So there's an increased risk if we do not rally much here, an increased risk that we're seeing the high of the month, and that we might be starting a swing down on the monthly chart. Well, a swing down on the daily chart, it'll be a bull flag on the monthly chart like this. You know, here's a 2-month pullback, a 3-month pullback, something like that over the next few months. And then ultimately a trading range for 6 or more months. Not a good looking sell yet, but not a good looking buy either, right? All 4 bars are small. 4 of the past 6 bars were dojis. So even though we're always in long and we're trending up, there's not much energy yet. So right now we're deciding, are we putting in the high of the month or are we going to rally, 20 or 30 points and possibly create a reversal bar? Here, it went up and down. There's a reversal bar, but it's a bull body. The bears would like to get a reversal bar and a bear body. So right now, are we going to form an early high of the month, in other words, early high of the day as well, and begin to sell off? Or will we go up and then the bears will try again 20 or 30 points above where we are? Best choice right now for most traders, flat. A lot of times when you get rallies, a lot of the days just look like they have no energy. Yet when you put a whole bunch of them together, the market can go quite a bit higher. And that's what the market's been doing over the past several weeks, spending a lot of time going sideways, yet it keeps putting in new highs. Here we have a lot of energy, but prior to that, we had all these really quiet days, and we're back to this kind of trading. Rally for 3 bars and then not much. Rally for a couple bars and then not much. Rally for 2 bars and then not much. But still working higher. And we're still in that process, and the bears need a reversal to stop that process. Now we have a 5-bar bull micro channel on the day. Actually, no, it's a 5. I was just checking to see if 2 went below 1, and it did not. So it's a 5-bar bull micro channel, and that will make bears hesitant to sell below 5. Also, the channel up from 73 is very tight, and that will also make bears prefer to sell a second entry sell. We had that on Friday, and I said at the time that it just looks too perfect. And whenever something looks just too perfect, and perfection cannot exist, and that means it's probably a worse setup than what it appears to be. It looks like a great entry for a second failed breakout above yesterday's high, but two great looking bear bars. I don't know, I just thought it looked too good, and this is what we got, a reversal and an early low of the day. Market at the start of every day is deciding on direction. Is it an early low of the day? Is it an early high of the day? 50% chance on any day, any strong move is going to reverse. On Friday we had a very strong move down, and the context was good, yet it still reversed. Here, 5 consecutive bars closing above their midpoints. So always in long by the close, but I think it's probably better to wait. You're buying high, and the rally is not very strong. Suppose we get a decent bear bar here. Because of the 6-bar bull micro channel, a lot of traders will not take the sell. Odds are buyers below. Bulls, 5 bars or 4 bars closing on their highs, trying to get a 5th one. So by the close, but a lot of traders are hesitant to buy. We're at the top of 2 channels, a 5-day channel and a 3-day channel. The outside down bears are giving up, right? They were hoping that we would just go a little bit above last month's high and reverse down, so they're giving up. And now you're left with the bears hoping for a bear reversal bar on the monthly chart, and they know that the market probably has to go up 20 or 30 points before they can get a reversal down. And the bulls see that the bears failed at the outside down bar, and therefore they're buying. Buy climax bar. It's still by the close, but I think it's pretty difficult to make the math work. Can you sell up here, betting on the early high of the day? I would not. I would wait. You have some bears selling here. It's interesting math. You sell the 6 close, put a stop a point or 2 above, and take a chance that you're selling the high of the day. Right now, maybe 20% chance, but if we start to get a series of bear bars, then the probability goes up. Unlikely to go straight down, so even if this is the high of the day, we'll probably have to go mostly sideways for a number of bars. For the bears, this is a failed breakout above yesterday's high, but a 7-bar bull micro channel and a 20-bar or 15-bar tight channel. So a low probability stop entry sell below 7, even though the context is good. So too late to buy, and probably too early to sell. It is by the close, but I would not buy this close. We're at the top of 2 channels, and we have a potential final flag, a trading range late in a bull trend. And for the bears, a 7-bar bull micro channel, there will be bulls buying the 7 low, betting on at least a micro double top. I would not. We're right at the top of two channels in a very overbought market on every time frame. 5 minute, 60 minute, day, week, month. It's important that the bulls were able to prevent the bears from getting a bear bar and from getting a bear bar closing on its low. Technically, it's still by the close and by the low bar 7, but the context is bad. Can it simply reverse down from here and be the high of the day? Probably not. Probably there'll be buyers below 7, and the bulls who buy either here or below 7 probably will be able to avoid a loss. So in other words, the market would allow them to scale in and avoid a loss. I don't want too many lines on the chart, so I do not need both channels. It does not matter that it's climactic and at the top of a channel. There's no credible top, and the first 7 bars all close above their opens, no bear bars and 7 bars. That makes the first reversal down likely to not get very far. Globex chart testing the Globex high. We went, looks like 1 tick above it. Low probability sell, but not a great buy either. Also, it becomes, I think, tricky to manage buying up here, because we're at resistance and in a buy climax, and traders buying are hoping for at least a little bit more up, and they've been successful for the first 7 bars of the day. Bar 8, we have a buy climax on 6, hesitation on 7, and tail on 8, and a close below the midpoint. So might be starting to go sideways. Unlikely to go straight down. Probably will have to go sideways before it goes down, if it goes down. $60-minute chart. Let me redraw the channel. Might get a measured move up from, we have a breakout here and a gap that low this high. So that's a potential measured move. That's around 25.34, so another 14 points above where we are, 12 points above where we are. Bears need the market to go sideways and start getting some bear bars. We have 8 bars today, not a single bear bar. And that makes selling a low probability thing to do. But the rally is not all that strong, and we're at resistance, and we're in buy climaxes on the higher time frame charts. So I think difficult to buy up here. This is similar to the monthly chart. Here, the microchannel began here, so we're now in a 10-bar bull microchannel. First reversal down, probably not going to get very far, but 10-bar bull microchannel. A lot of traders are hesitant to buy without some kind of a pullback. We have a gap, 7 low, but we're probably already around the measured move target. about selling above 9, betting on a final flag now that we're getting doji 7 and 9. I would not do it. It's still by the close, but I'm flat. If I were not talking, I might have bought the 4 or 5 close. You have these surprise rallies on the open. The market usually ends up in a tight range for the rest of the day. So this is probably going to start happening pretty soon. Doesn't matter that it's becoming a parabolic buy climax, it's still going up, and there's no top yet. Type of a parabolic wedge rally. Extremely strongly up. The bears had to get at least a micro double top, and the result was a trading range. A lot of times you'll get an endless pullback, 10, 20 bars. If you do, it's still slightly more likely you'll get trend resumption up, but at least a 40% chance you'll get a breakout and follow through bar and then a swing down. Sideways here forever. Parabolic wedge, it failed. Tried to get another top, it failed. Parabolic wedge, broke strongly to the upside. Tried to resume up again, but did not get very far. Parabolic wedge, sideways forever. Strong rally. Is it a parabolic wedge? I don't know. Right here is an attempt at a parabolic wedge, sideways. I would not buy up here. I think this is a parabolic wedge rally, and we're probably going to be mostly sideways for the next 5 or 10 bars. It's still by the close. We've had 10 bars where every bar closed at or above the open of the bar, and every high is at or above the high of the prior bar. So strongly bullish, but too bullish. Can you sell and use the stop 4 or 5 points up, betting that will be sideways to down? Well, I think you're probably betting that it's sideways, so you'd be risking 5 points, and we may do this for hours, and you're not going to want to hold short on risking 5 points and then have it go sideways for hours like that. So I think it's really hard to sell, and this late in a parabolic rally, I'm not going to buy. We had a bear bar there, bear bar here. We had a little bear bar here, a bear bar here. Today we haven't had a single bear bar yet. So bulls are buying everything. The bears have been unable to do anything. So it makes it unlikely that we're going to go very far down over the next few bars. Can you buy the 11 low, 11 bar bull micro channel? The logic says yes, but I'm not going to do it. This is just too extreme. Getting near the end of the first hour, and so far a very good bull bar. I think better to do nothing here. Probably buyers below because of an 11 bar bull micro channel, but it's a parabolic wedge. So too much risk of the start of an endless pullback. Usually if you have a parabolic wedge and no bear bars, the odds are there'll be buyers below. the odds are we're not going to go down at least for 5 or 10 bars. Close of the first hour, bears trying to put a tail on the top of the 60-minute bar to make it less bullish. And the bulls would like the hour to close on its high. But to me, this is a series of buy climaxes. A little one here, big one here, another one here. And I think, I would wait for at least a couple legs sideways before buying again. What about the bulls who bought the 11 low? They probably will make money, but as I said, if you get a strong rally on the open like this, usually the market ends up going sideways for an hour or two in a tight range, and that's probably what we're going to get here. Now, what about all those by the close bulls from 8, 9, 10, 11? Right? How are they feeling right now? They're thinking, uh-oh, this is not what I expected. Also, the bulls who bought the 11 low, they're also thinking, this is not good. Again, sideways more likely than up or down. Really unusual to have an 11 bar bull microchannel without a single bear bar. $25 bar bull microchannel. Here, this is similar to today. A 10 bar bull microchannel, sold off strongly, but big up, big down, big confusion, and sideways. And I think that's the best the bears will get over the next hour or so. They might get a few bear bars, but bulls will still buy. The bulls were so eager to buy here that even with the reversal down, they'll be eager to buy as well. There's a 60-minute bull microchannel lasting 19 bars. The result was sideways. When can the bulls buy again? Theoretically, they bought the 11 low, and they'll buy more 1 point lower, which is right here. But it's such an extreme buy climax that it's probably better to wait for at least a micro double bottom before buying again. And to sell, I think it's too early to sell. We probably have a big up, big down going on, so we're probably starting to form a trading range, and we're looking for a bottom to the range. So what about those buy the close bulls, 8, 9, 10, and 11, and the buy the low bulls, 11? They're thinking, uh-oh, disappointed, have to scale in and try to avoid a loss. And for the bears, they need a lot more to get traders to sell this low down in that strong a bull trend. Here's the Globex chart, a failed breakout above that high. I think it's still always in long, so if I had a choice long or short, I'd be long. Now, that's a bear bar, but it's also bar 12. Right, at the final bar of the hour often does something to affect the appearance of the 60-minute chart. And you can see by bar 12 selling off, it greatly weakened the bull bar on the 60-minute chart and reduces the chances that we're going to go a lot higher. Bears probably need 3 bear bars to become always in short. But even then, as I said, here, 3 bear bars, trading range. So, when you have that much strength, very unlikely to become a bear trend. More likely, the best the bears get is a trading range. And that is true here as well. What will happen to the buy the low bulls 11? they will probably make money. We'll probably get at least one tick above the 11 low. And the bears who did sell, most of them will scalp because they know the odds are against a bear trend after an 11 bar bull microchannel, even though it's extreme and climactic. Now, what about high one bulls buying above 13? Probably big enough, big up, big down to create big confusion. And the bulls buying above 13 probably have to use a very wide stop, and they have to be willing to scale in. And the bears, will they sell the 13 high, looking for a second leg down? I think the bears know it's always in long, and therefore they do not want to sell far below the high. They want to sell closer to the high, or after more bear bars. So right now we're in the buy zone, and the market's deciding if it's going to have one bear bar or two or three bear bars and pull back deeper. We're very close to a 50% pullback. Came to within a tick or two of it. Always in long, all right? So bears probably will take profits here. Bulls, we're in the buy zone, right? A point below bar 11, near a 50% pullback. But probably sideways for an hour or more, possibly the rest of the day. Parabolic wedge, unlikely to go straight down. More likely, even if you get a strong sell-off like 12, you're going to go sideways. 3 bars without a bull body, right? So reduces the chances that this is going to be a profitable high one, increases the chances that the bulls will need at least a micro double bottom. And bears are hoping for an endless pullback from a parabolic wedge rally. So they're just hoping for it to just pull back for a lot of bars like this. I don't think we're going to get that. It looks like we're probably more volatile today. I don't think we'll get that. I think we're going to go sideways, but I don't think it'll be in a tight range like that. Looks like we're probably going to get bigger little bounces. I doubt that we'll get that also. You know, we had a pullback here, a pullback there. So this is the third pullback. And today we're still on the first pullback. I think sellers above, but I don't know if they'll sell the 13 high or sell higher up near the 10 or 11 high. Probably sideways for the next hour or two, possibly the rest of the day. And you look at it and say, well, how can it go up for 11 bars without a pullback and then just stop going up? Well, it's because it's so climactic. And we're, not just a climax on the 5-minute chart, it's a climax on the daily chart and especially on the weekly and monthly charts. Weekly chart, monthly chart, it's just so climactic. Parabolic wedge here. So this is probably going to start doing this. Bears trying to get a second leg down, but they only had one bear bar, 12. They did not have consecutive bear bars. Not strongly bearish, and a lot of bears only want to sell higher. The bulls know the odds still favor a limited move down. They know the odds are this is a bear leg in a trading range. They don't yet know if 13 is the bottom of the range or if we go lower down to the 7 low, the pullback after the 6 buy climax, which would be around the moving average. GoToWebinar has a toolbar here, and I'm trying to move it to a place that is less of a problem for me trying to look at charts. I'll try over here. Last week, strong rally sideways for 3 hours, right? Strong rally sideways for 6 or 7 hours. Strong rally, probably sideways in a tight range. Tight range here, tight range there. Probably the start of a tight range here. Bulls, micro double bottom, always in long, but big up, big down. Big up 10, big down 12. Probably a limit order market. The bulls who bought 1 point below 11 after 4 bars have still not yet made even 1 point. So it's probably going to be disappointing trading here, and we may start to do this. This is unusual, 11 bars without a bear body, so it increases the chances that we're going to get at least a little bit more up. Here we had about 5 bars without it, and then we got a bear body, a little bit more up. Here, bear body, and still, even after this, we got a little bit more up. You know, the bears are hoping that we're in this stage, but that absence of a bear body for 11 bars, I think increases the chances that we're going to try to go at least a little higher. I'm currently flat. I decided to buy below 12 too late. I placed an order during bar 13, did not get filled. We went up a little bit. I thought we would go up, and after we went up, we came back down, and I don't want to buy hoping that we're going to go up again. I thought that we would go up a little bit, and we went up a little bit. Had I bought, I would not have made money. But, you know, if I'm betting it's going up a little bit, and it does go up a little bit, and then it comes back down, I'm not going to buy again, betting that it's going to do that again. So if I'm looking for the market to do something, and I place an order, my order does not get filled. It then does what I expected, and then comes back down to my order price. I'm not going to buy the second time because it's already accomplished what I thought it was going to do. And I don't necessarily believe it's going to do that a second time. Scale and bulls 11 low, made money. Market's deciding, are we in the trading range now? Will we get a lower high, or will we go above the 10 high? If we do go above the 10 high, you know, like that, I think the upside's limited. So if we go above the high and pull back, go above the high, probably sellers above. Went above the high, sellers above. Here, could not even get above the high. This is what the bulls are hoping, that we go above the high, keep going up, go above the high, go up a lot. Why are we hesitating? Because the bulls are selling. The bulls have bought the 10 low, disappointed by 12. They bought more 1 point lower, and they're happy to get out, break even at their first buy, 11 low, and then with a profit from their lower buy. So the bulls are selling, you know, trying to get a scalp on their second buy and getting out break even on their first. The bears a lower high, 2 legs up, 14, 16, but the legs, they've only had one decent bear bar. the odds are the best they're going to get here over the next 5 or 10 bars is sideways, and the bulls might get one more new high. A lot of the bears want to sell higher. They want to sell above the 10 high, not this far down, because they think the downside is probably not very big. You can see the bulls have switched to scalping. Buy the 11 low, buy more 1 point lower, and then when it gets back to the 11 low, exit. Bears need 2 or 3 consecutive bear bars to make traders believe that we're always in short, and this will remain the high of the day. By bar 7, 50% chance we've seen either the high or low of the day. By bar 18, 90% chance we've seen either the high or low of the day. And right now this is bar 17, so probably 80% chance either 2 will remain the low of the day or 10 will be the high of the day. We're always in long, so it's slightly higher probability that 2 is the low and that will go above 10, but it will not take many bear bars to change that. Bulls want the failed low 2, which they probably will get. We're still always in long. And the bears are hoping that this lower high, even though minor, will lead to a trend reversal. Sometimes when you get a minor reversal like this, a lower high like this, in fact, it leads to a major reversal, usually not. Higher probability of a minor reversal being a major reversal if it occurs in the first hour or so, but still the odds are against it. This is bar 18. By the time it closes, 90% chance either 10 will remain the high of the day or 2 will remain the low of the day. Right now, more likely we've seen the low of the day. We had a day similar to this where the market rallied early and formed the high of the day. And this is what it did for the next 4 hours. And the bears got trend reversal down, but the reversal down failed, and we closed around the middle of the day. But bar 5 remained the high of the day all day, despite a gap up and 3 decent bull bars. Same thing here, we're always in long, but it's possible 10 is the high of the day. Bears will look to sell double top with the 16 high or the 11 high, or with the high of the day, the 10 high for that matter. And the bulls are looking to buy below things. But really difficult to make money when the range is this tight. The bulls have bought the 16 low, have not yet made money. They tried to buy more 1 point lower, but 18 only fell 4 ticks. It had to fall 5 ticks for those bulls to buy more, and therefore the 16 low bulls were unable to scale in. And a lot of them will try to get out break even. They might try to hold, hoping that we go up 4 ticks, but they're probably not willing to swing trade. What about looking at this and saying, okay, 90% chance we've seen either the high or low of the day. We're closer to the high. So if I sell here, my risk is less, versus if I buy here, my stop is down below the low of the day and my risk is more. While that's true, we're always in long, so the risk for the bears is less, but so is the probability. The risk for the bulls is greater, the stop is further away, but we're still always in long, and therefore the probability for the bulls is better. That's the way it usually is. If one side has less risk, the other side has higher probability. The top of a 3-day channel and also the top of a 5-day channel. I said on the 15-minute chart we might go up about 5 bars, but the odds were against the market going up much more than 5 bars, because that's what typically happens if you have a channel and you look at the highest time frame that clearly has the channel. 75% chance that the breakout above the channel will fail within about 5 bars. And this is the 5-minute chart. Here's the 15-minute chart. Has both channels, has that channel and this channel. So 75% chance the breakout above the channel will fail within about 5 bars. And right now we're 3 or 4 bars above the channel. You can call it a failed breakout below a double bottom. So it's a type of wedge. 3 legs down, 1 and 2 forming a double bottom. And we're getting a bear breakout. If the bear breakout reverses up, it's basically a wedge bull flag at the moving average near the bottom of the most recent Y climax, the 8, 9, 10 low. Bears are hoping for a pullback that just goes on forever, endless pullback. Endless pullback. If they can get it to go 10 or 20 bars, then they have at least a 40%, maybe 50% chance of a bear breakout and a swing down. Tight range. It's sloped down somewhat, but it's still very tight, and no one has made money with stops since bar 11. You know, buying above bars has been bad, selling below bars has been bad. I think most traders are better off just waiting. Waiting for what? Waiting for either a strong bull breakout for at least one more leg up, or a strong bear breakout and at least 2 legs down. 1, 2, sometimes you get that. And for the bulls, they don't mind the sell-off as long as they're able to start turning it up. 3, 4, 5 bull bars, probably going at least a little higher. But because the market is so neutral here, chances are it's not going to go a lot higher, and it will come back down to that neutral area. Same thing here, pull back for 10 or 20 bars, 50% chance trend reversal, 50% chance trend resumption. If you get the trend resumption, usually it's brief, and this is an area of agreement. The market usually comes back to that area of agreement. Here, sideways for, 40 bars. Went up, end of the day. I don't know what happened on the next day. Bears need a breakout bar, a decent bear bar closing on its low, and a follow-through bar. If they get it, then traders will believe we've started a swing down. Otherwise, we have an endless pullback, and we could get trend resumption up or trend reversal down. Endless pullback, resumption up, endless pullback, reversal down, endless pullback, and then 2 or 3 bear bars closing on their lows like that, consecutive. Then you're probably always in short, and you're going to get the swing down. Bears trying to get the breakout, and the bulls want it to fail. The bulls prefer that we continue in an endless pullback down in a tight channel than the bears getting a decent bear bar. Even if the bears get a decent bear bar, they really need 2 to convince traders that we've seen the high of the day. We're getting near the end of the second hour. Remember that we had that tail on the top of the first hour, making the bulls, telling us that the bulls were weaker, and now we're getting a bear inside bar here, but a pretty tight channel, usually not going to lead to a big bear trend. but possibly could get that, a bull breakout, and then sideways, turned out sideways for several days. Limit order bulls have not made money since the 14 low. Remember, on the open, I said the goal was the bottom of the channel, and you can get there by going sideways or by going down. Bears are trying to go down, but they need to do more to convince traders that we're going to go down below the low of the day. You can see the result of this sell-off. We have a tail on the top of the bar on the daily chart. This bar and the next bar are important. The bears need 2 bars, and they prefer the first bar to be reasonably big and closing on or near its low. This so far is not particularly big. If it has a 2-tick tail below, that would reduce the chances that we've begun to swing down. The bears understand that this bar is important, and they're trying hard to get it to close on its low, and they would like it to become bigger than it is. The bulls know that as well, so the bulls are buying anytime it gets near the low of the bar, trying to put a 2 or 3-tick tail on the bottom of the bar, reducing the chances that we're going to get a bear breakout. Final seconds, a lot of times the market does something in the final second or two to change the appearance. Okay, only a 3-tick bear body and a 2-tick tail below. That does not look like this. That's the biggest bear bar in 20 bars. Does not look like these, not especially big, but closing on their lows. So it reduces the chances that we've begun this, reduces the chances that this is what's going to follow. Important for the bulls to prevent a bear bar on the current bar. So they want a bear bar, last bar, to have bad follow through. Bears look like they're getting a better breakout bar here. Remember, I said by the close of 18, 90% chance we had seen either the high or low of the day. And right now, it looks like we've seen the high of the day. We could still stay above the 2 low, but if 24 closes around its low, then we're probably always in short, and we'll probably fall below the 2 low. If it has a 2 or 3-tick tail, then I think a lot of bears would be unwilling to sell closes. If this bar closes above its midpoint, bulls probably will start betting against a successful bear breakout and increasing the chances that instead of going down, we go sideways and test this lower high. Remember, I said that we may end up simply going sideways for a lot of bars after 11 bars up without a bear body. What are the chances of a failed parabolic wedge and a big rally? Small. We've had too many bars down and we're too far below the high of the day. That means that the odds are we're either going to be in a trading range or a bear trend, but right now it looks more like a trading range. The bears are not getting consecutive big bear bars, so it looks like this is probably going to be a trading range today. But right now it's slightly more bearish than bullish, and the odds of a failed parabolic wedge are small. Here we went mostly sideways to the moving average. We got a failed parabolic wedge top. Here, sideways to the moving average, a little bit down, but mostly sideways. Here, sideways. That's what failed parabolic wedge tops look like. They do not look like this. This is too many bars down. So right now I think it's more likely that we've seen the high of the day. So this is either the start of a bear trend or more likely a bear leg in what will be a trading range. Either way, traders are willing to sell, because if it's a bear trend, they're selling at the start of a big swing down to the 60-minute moving average. If it's a trading range, they're selling, and they can sell more higher. Just like the bulls were buying for any reason, knowing that the first reversal down would be minor, and they could buy more lower and get out with a profit on their second entry. For the bears, they have a breakout 23, a follow through 24. 24 is the end of the hour, and they have a bear bar on 24, but that tail on the bottom of 24 put a tail on the bottom of the 60-minute bar, and just like that tail on the top of the first 60-minute bar made it less likely to lead to a trend up, this tail on the bottom of this second hour makes it less likely that we're going to go down very far. It's a bad looking sell signal, like this is a bad looking sell. So probably going to be sideways. So instead of a buy climax and a reversal at the top of the channel and the start of a trend down, more likely we're simply going to go sideways. Maybe we have to get below that bar to see if there are buyers or sellers below, but probably not going a lot below without first bouncing. How high up can we go? Well, an obvious target is the most recent major lower high, which is the 16 high. The bears are hoping that we're in a bear channel and that this will be a pullback to around 50% of the channel and lead to a lower high and another leg down. I think more likely it's what I said earlier, that we're going to be in a trading range, and the market is simply looking for the bottom of the range. That tail on 23 and then a bigger tail 24, even though it's consecutive bear bars, I thought it made it more likely that this is going to be a bear leg in a trading range and that we were going to bounce. What I did was, when 24 closed, I placed a limit order to buy at the 24 close, but scalp out 1 point. And I put a stop 2 points below, and I would have scaled in a little bit lower, but I'm back to flat now. The sell zone, you can argue halfway down from this bear leg, but this bear leg is not strong enough for me to be selling that low. So we're probably going to get at least 2 small legs up. That means buyers below 26 or 27, and we'll probably test the 16 high. This is what we're probably doing right now. So probably this kind of a thing for the next hour or two. Bear leg in a trading range, bull leg, bear leg, bull leg. And then here we got trend resumption up, which is slightly more likely given how strong this was, but the bears could have gotten trend reversal down instead. Today's rally, I think, is not as strong as this micro channel, but here all the bars were bull bars. Today micro channel, but doji, 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 big tail, doji. So this is less strongly up and therefore less likely to get trend resumption up after the trading range. Okay, good enough reversal, 25, 26, probably buyers below and at least a small second leg up. If the bears do get a reversal down, probably buyers around the 24 low. So we'll probably try to get a double bottom here, and the bears will try to get a double top up here. So this is probably the range over the next hour or so. For the bears, double top 16, 50% pullback in this sell-off. They have a bear breakout and a follow-through bar, but I think that is not strong enough to make it always in short. And I think probably more buyers 26 low than sellers. I think a trading range is more likely than a bear trend over the next several bars. So I think it's more confused. The odds are we're going sideways to down to the bottom of the channel. So the upside is limited. But I still think probably buyers below 26 and we'll go sideways more. We still have the sell signal on the 60-minute chart. We have a bear inside bar after a buy climax at the top of a channel. But that tail on the bottom of the channel plus the channel being tight make it a low probability sell. Therefore, there are probably buyers below last hour's low, which means buyers below 24. We have a magnet just below, so we may go down to that magnet, which is that channel. Remember I said that by the close of bar 18, 90% chance we've seen the high or low of the day. That's still true. Here's the low. Here's the high. And right now we're still deciding which will remain. So will this remain the high of the day? Will this remain the low of the day? We're about halfway between the two, deciding. I think we're slightly more bearish than bullish, in part because we have a magnet below the bottom of the channel. Here's the 15-minute chart, a clear channel, bull breakout above the channel, 75% chance you get a reversal within 5 bars. We got the reversal within 3 bars, and then sideways or down to the bottom of the channel. Back to the 5-minute chart. So the upside is probably not all that good until after the bulls break below the bottom of the channel. But even then, as I said, I think the reversal down is enough so that today will probably not end up as a bull trend day. It probably will be either a trading range day or a bear day. The bears had their chance, 22, 23, and they failed. So it's probably not going to be a bear day either, which means it's probably going to be mostly a trading range day. Limit order bulls, buy 26 low, try to buy more 1 point lower. Unable to buy more 1 point lower, so a lot of them will try to get out break even at their original entry, the 26 low. You have double bottom stop bulls, double bottom 24, 29. But 2 pretty good bear bars, 27, 28. So a lot of the bulls will not buy with a stop. 1 tick above the 26 low, so the limit order scale in bulls were able to avoid a loss. They could get out break even here. Because we're halfway between the high and low of the day, we may go sideways here, more bars. Remember, the bears were hoping 25, 26 was a lower high in a bear channel, and the reversal up on 29 makes it more likely that the sell-off to 24 was a trading range and not a bear leg, and not a bear channel. Last hour, an inside bar. This hour might be an inside bar as well. Target for the bulls, the 16 lower high, which is also the high of the second hour, the high of that red bar. Pretty good bar for the bulls. Stop entry bulls don't want to buy that far above the low. And for the bears, I think they had a chance to create a bear trend day, but failed, and therefore this is probably a bear leg in a trading range. We're at an all-time high, and pretty common when the market's at an all-time high for it to have a buy climax. Here's an all-time high, and look what happened, right? You got a reversal bar, daily chart. Here's an all-time high, parabolic wedge top. This is what the daily chart looked like at the end of the day. Reversal, all-time high, reversal. Closed way off the low, and it was a bear doji bar, but still all-time high, got a reversal. A lot of times all-time highs have very strong moves to the all-time high. Here's a huge gap up to the all-time high, and that was the end of it. Strong rally to an all-time high. Very strong move to an all-time high. All-time high. Strong move, but it just ended. It didn't continue. All-time high here, and then we got, here's the all-time high up here. Very strong rally to the all-time high, and it just stopped. So whenever the market's at an all-time high, and you see a very strong move like this, do not believe that it's going to result in a huge bear trend, because very often strong rallies that break to a new all-time high do not keep going up. They either reverse or they go sideways. All right, so nobody wanted to buy above 29, and we have the magnet of the trend line below, and the bulls are unable to break free from that magnetic pull. Bad math here for structuring trades. We should get to the bottom of the channel, but we may bounce first. And it looks like more of a limit order market in here, limit order scalps. Bears, if they do get below 24, we may get a breakout, but I think it probably will not get much below the bull trend line and low of the day if we get down to the low of the day. Remember I said yesterday's tight range might be a final flag, and that if we rally, we may get pulled back down to this area of agreement. It's starting to look that way now, but the bears are not breaking strongly below anything with good follow through. I did not buy the 29 low. The market. The bulls needed a reversal up, and they got those two bear bars, 27, 28. And I've been talking since the open about the bottom of the channel. We're getting very close to it. I think we're probably going to have a hard time going up without first touching that trend line. Is that close enough? I think this is interesting. We came to within a couple ticks of it. No, it's not close enough. And therefore, if we bounce here, we probably will not get very far, and we'll have to get to that line either by going sideways or going down. Bulls are buying below the 60-minute bar because they see it as a bad sell signal bar. Two bull bars, tight bull channel, tail on the bottom of the bear bar. But I think we're going more sideways to down. The bulls are hoping for a failed breakout. You can call it a wedge, 1324, but I think we're going to have a hard time going up very far because there's a big magnet right below the market, that trend line. Let me take a look at it and see if I have it drawn in correctly. That looks like a reasonable trend line. We've had a lot of trend lines on the way up, and the market just has been turning up before reaching them. And the bulls are hoping that this is another example. So not a great buy unless you're willing to use a wider stop. And for the bears, not a great sell. If you're selling above bars, not below bars. And you're not selling at the low. If we get to the line and form some kind of a micro double bottom there, then it would be a buy for a test of the 26 high, the most recent significant or major lower high. It's not all that major, but when you're in a bear channel, every lower high is a magnet if we get a rally. I think better to wait here. I think we're going to get to the line. And therefore, even though I would otherwise want to buy a wedge failed breakout like this, I'm not gonna buy this. I've been talking about trading range, not bear trend, and I still think that's true. The bears are getting disappointing breakouts. The breakout below 13, small, and then a bull bar. Breakout below this, small bear bar. And we tried to get a wedge below 5. We got a breakout, small bar tail, next bar big tail, and now we're getting a breakout again below a bottom attempt, but a doji bar, and closing near its high. So that's disappointing. So while I think we're going to hit that bull trend line below, I still think a trading range is more likely than a big bear trend. However, at any point, we can get a pair of consecutive good-sized bear bars. And if we do, then I'll start thinking about a measured move down, and I'll probably start selling closes or selling small pullbacks. We're in a buy zone, bottom of the bull channel, near the low of the day, but the bulls need to do more. They need a micro double bottom or a decent bull bar. Keep trying to get reversals, but that magnetic pull of that bull trend line, I think, is too strong. So I think we have to touch that line before a lot of bulls will consider buying. Not just touch it, they want to see the absence of a big bear break below that line and below the low of the day. One of the nice things about software nowadays is you can draw precise trend lines. Usually if the market gets to within 2 ticks of a support level, even if it reverses up, it cannot get very far without hitting that support level. So the odds are against a strong reversal up here. Even though you look at this and say, the sell-off has been terrible, bad follow through after all the bear bars, here, and terrible breakout here, bear bars, bull bar, bear bar, doji, bull bar, right? So it's a weak sell-off, and you have to decide, is it a bear leg in a trading range or a small pullback bear trend? Well, it's a small bear leg in a trading range. It looks like this, no gaps. The limit order bulls either make money or avoid a loss. I should make one of these for the bears, but bull leg in a trading range or bull leg in a trading range, which this is, bull leg part of a trading range, or bull leg in a small pullback bull trend. Gaps. Every breakout point finds support every pullback from a breakout finds support at the breakout point, and a trend like that can last all day. Good bar for the bulls. Will we still get to that trend line below? Well, it's a trading range day and a fairly tight channel. Tight channel, we probably have to get some kind of a double bottom. And if we do, then we'll hit that line. So we can hit that line with a reversal that does not even get to the 31 low. Can you buy up here betting on the reversal? No, I would not. I would buy a pullback. And where do the bears sell? 26 high, 16 high. Yeah, they'll probably sell above things. We're getting near the end of the third hour. Remember I said the second hour was a bad looking sell, and there probably would be buyers below, and there were. You can see we now have a high one buy, but we had a bull breakout with a big tail on top and a bear bar here, and therefore this is not a great looking buy. Let's say it closes on its high. That would be better for the bulls, 60-minute bulls, but I still think sideways is more likely. I said that earlier that I thought, this is kind of what we have, that will probably be sideways for the next many bars. We went below the sell signal bar, but not much below. Now we have a bull signal bar, 60-minute chart, and if we go above, probably not much above. It looks like today is going to end up as a trading range day. Can you sell right here, betting on a lower high 26? I would not. 34 is a surprise bar, and therefore we'll probably get at least a couple small legs up. We have a bear channel. The targets are the lower highs, and it looks like we'll get to the 26 lower high. Right now I think we'll get to the 16 lower high as well. This rally was very strong, and therefore this is probably the top of a trading range, and this is the bottom of the trading range. Top of a trading range means we should get close to the top, which means maybe around the 16 lower high. So spike, pullback, channel. The market usually gets back to the top of the channel, but it often goes sideways after it goes halfway up, and we're right around halfway up, so we need to go sideways a little bit here. And as I said, we might come down to the trend line. At the moment, I think we will hit the trend line at some point today. But right now, this is enough of a surprise to make me think we're probably going to get up to the 16 high. Do the bulls buy 35 low, or do they buy more of a 50% pullback? Well, we'll probably get a pullback soon. I think we're probably going sideways to up. I think we're in a trading range, and therefore bulls can buy below bars, below 35, or a 50% pullback, or below 34. Putting a stop either below 31 or maybe 5 ticks below 31, maybe below the low of the day. And bears, they will sell the 26 high and 1 point higher or 1 point higher, and they will sell the 16 high as well. Confusion, hallmark of a trading range, and usually better to use wide stops and scalp. No easy way to trade it. The bulls at a minimum have a stop below 31 or the low of the day. Bears at a minimum have a stop probably above 16, better above the high of the day. And traders will sell as it goes up, scale in more, and scalp as it goes back down. And as it goes down here, bulls will buy and scale in. And then if it turns back up, which it probably will, they'll scalp out. This is bar 36, the high one buy signal on the 60-minute chart, but this or this is more likely than much up. This looks like a bull flag, strong breakout and a weak sell-off, bull flag. NASDAQ, on the other hand, had a very, very strong sell-off, and therefore unlikely to get back to the high of the day. And the best the bulls will probably get is a trading range. And it's highly correlated with the E-mini. If the NASDAQ is probably going to be in a trading range, now looking for the top of the range, that also increases the chances that the E-mini is going to stay in the trading range as well. Bar 36, the top of the third hour was the 26 high, and we got to it but not above it. As I said, even if we get above it, I think nothing has changed. We're probably not going to get much above it, and this is probably a trading range day, so bears will sell above things and bulls will buy below things. The bulls prefer to buy somewhere in the lower half of the most recent bull leg, so somewhere down here. Bears want to sell in the upper half of the most recent bear leg, so somewhere up in here. Trading range legs often last 2 or 3 hours, and we sold off for, I don't know, hour and a half or so, 20 bars, almost 2 hours. Well, it's possible that we go up 2 or 3 hours here. I think it's more likely that it's just going to be a mess and that we're just going to go sideways. You can see the bears are already selling 36 high, but even if we break out, probably sellers above 16. If we reverse down, buyers below 31. Bulls trying to get above the high 1 buy signal bar on the 60-minute chart, which is above bar 26, but a tail on top of the bar, big bear bar here, tail here, looks like a trading range, and therefore probably sellers above the high of the last hour, so probably sellers above 26. Not a good reversal down below the second hour, and therefore probably the best the bears get is a trading range as well, which means probably buyers below. Remember, we still have the magnetic pull of that trend line. It's now above the low of the day. I still think we will get to that line at some point today, but trading range day, so probably buyers not far below. The bears want a double top and a break below the neckline and a measured move down, which takes us below the low of the day. But I would rather be selling with limit orders, and I did not sell the 36 high. We're above the 26 high, so we're in the sell zone, somewhere above 26, maybe up to the 16 high. Less likely we'll get leg 1, leg 2, leg 1, pullback, leg 2. We're probably always in long. The bears tried to get short 22, 23. They probably did not do enough. They tried again 28, could not get a breakout and follow through. Tried again 30, decent bar, but bad follow through 31, 32. However, we're also still, even though we're always in long, we're still probably a bull leg in a trading range day. The pullback is probably too deep to lead to a big rally from here. If we pull back down here and get a double bottom, then I think the bulls would have a better chance, but they're going to run out of time, and therefore probably a bear leg in a trading range and now a bull leg in a trading range. And the bulls probably will have to test down here maybe later today or tomorrow, and then they'll have a double bottom, a neckline, and they'll try for measured move up. And because this channel is tight enough, so the reversal is probably minor, and therefore we probably have to test this low, that means we're probably not going a lot higher here. What happens if we just go up relentlessly all day? Well, that can happen. We can get a small pullback bull trend and it can last for several hours. It's not likely. More likely, there'll be sellers somewhere above 26 up to around the 16 high. Bulls know that this is probably a bull leg in a trading range, and therefore they're trying to create a gap to trap limit order bears selling 26 high, and then they hope for a measured move up. But I think even if we do go higher, it's still probably going to be a bull leg in a trading range because this channel is tight, and when you have a fairly tight channel, the first reversal up is usually minor, and the bulls usually need some kind of a double bottom. This is about a 9 bar, 10 bar bull micro channel. So not a lot of stop entry bears selling below 40. But a lot of the bulls might want to buy a deeper pullback, like a 50% pullback. not a lot of bulls buying the breakout because it looks like a trading range day and traders want to buy below and sell above. 10 bar bear micro channel, so a lot of the bears are not selling. If they're selling, we get pullbacks. We're not getting pullbacks, so the bears are not selling very much. Difficult to do anything. Sundays are like this, always in long, but better to scalp and buy low. And probable trading range day, so better look to sell, but also better if he's trying to get pullbacks, which we're not. We have 10 bars without a pullback here, so better to take a second entry short. No sign of a top. Bulls trying to get trend resumption up. A lot of bars in this micro channel. Here we have a bull micro channel lasting a lot of bars, and we did get some trend resumption up. You can see the bulls needed a double bottom, which I think we'll need, but we're moving up pretty well here. Strong rally, unlikely to get a trend reversal down. The bulls got some trend resumption up, but could not get far above the high of the day. Here, deep pullback, and ultimately got trend resumption up after a strong bull micro channel, 60-minute chart. We're in the sell zone, but now we have a 12-bar bull micro channel, and a lot of bears do not want to sell until they see it go sideways a little bit. And the bulls, top of a trading range near a major lower high, so spike pullback channel. So this is the sell zone, but I think the bears need it to go sideways, and for the bulls, I'm not willing to buy up here. You got a spike pullback channel, 3 pushes, 1 or 1, 2, 3. So not a great buy. I think the bulls would rather buy lower, maybe the bottom of the channel, and the bears would like it to go sideways a little bit and get a micro double top before selling. We're in the sell zone above 26 and up to here. Some bears did sell the 26 high, and they needed to fall 1 tick below. Some bears sold the 26 high and 1 point higher. Other bears thought we might get up near the 16 high. Instead of selling the 26 high, they sold 1 point higher. So in either case, whether they sold 26 and 1 point higher or simply 1 point higher, they needed to fall below the 26 high. I think it'll do that at some point today, but we may go above 16 before we do. So right now, the bulls are hoping for a break above a double top. So for the bulls, we have a double top with 26 and 36 neckline here. Instead of breaking below the neckline, we're breaking above the double top, and the bulls are hoping that they get a measured move up. They might, it's just a little bit above the high, but whether or not they do, I still think this is going to end up as a bull leg in a trading range. But I think probably too early to sell. Look at the 15-minute chart. 3 good-sized bull bars closing near their highs. Traders do not want to sell. That's just a reflection of this channel being tight and the absence of pullbacks. But when the next higher time frame, 15-minute, looks like that, traders should not be selling. When the pullbacks are really small like this, 4 ticks, impossible to make money selling. We had this the other day, right here. So even when you do get a reversal, it probably will be small. And that's why bulls will continue to buy, even though it's not particularly strong. They know that if it goes down, they can buy more and it'll come back up, and they'll at least avoid a loss, if not make a profit. And that's the same true. That's the same true here. And that's why bulls are willing to buy up here. They know the chance of losing money is small, and they either make money by going up higher, or it reverses down, but not far. They buy more, and they can either avoid a loss or make a profit. The bulls who happened to buy the 36 close yesterday, they bought more lower. Let's say you bought more a point lower. They did not make money, but they also did not lose money. So they buy that 36 close, and they buy more a point lower, so they get filled over here. And then they place a limit order to get out at the 36 close, and you can see it hit their order, but did not fill them. Went back up again, and got right to their order again, and filled them at the end of the day. Did it? Didn't it? I thought it did. Yeah, it did. So anyway, the bulls bought the 36 close and 1 point lower, and maybe 2 points lower, had to wait 40 bars before they could make their money. However, they knew that buying in a very tight channel like this has very little risk of losing money if you can scale in and use the appropriate stop. I think it would be hard to hold long when you see that, and you see this, and you see that. But the bulls who did ended up making money. Same thing here. Bulls are buying knowing that even if it sells off, they'll either avoid a loss by buying more lower or making money. Other bulls, when they see a channel like this, they don't buy. They wait and buy 1 point lower or 2 points lower, knowing that eventually there'll be a pullback, like yesterday. So instead of buying in here, they place a limit order to buy 1 point down from the high close or 1 point down from the high, and then they buy more 1 point below that, expecting the market to come back up to the high. They believe any reversal is minor, which means either a bull flag and the bull trend will resume up, or it'll grow into a trading range, in which case it'll have a bull leg that will come back up to the top of the range. That's who's buying when you have these small pullback bull trends. Traders who are willing to buy more lower. For the bears, they have a lower high double top. They want to break below the neckline and a measured move down. The odds of that are small. Will we still get to this trend line? Well, right now, it would not take much to get there. It's already up to around the midpoint of the day's range. So it's not saying much at this point to claim that it's going to get down to the bottom of the channel. Now, bulls, as I said, a lot of bulls will not buy at the high. They'll buy a point or two lower, confident that it's unlikely to go down far despite a double top bear flag. This is right now a 15 bar bull microchannel, no pullback in 15 bars. Unlikely that the first reversal down is going to lead to a trend down. 2 tick tall bars here, several of them, so I'm probably not going a lot higher. But for the bears to sell, they have to use a pretty wide stop. I don't know what wide is, maybe 3 or 4 points, and then sell more higher. I think best choice is flat right here and wait to buy a pullback, or wait for it to go sideways and then break to the upside and then sell on that second leg up. We have a breakout 34, pullback, and then a channel. Even though it did not go below the low of the prior bar, it's still a small spike pullback channel, maybe on a smaller time frame chart. And the target is the bottom of the channel. The bears hope for a double top, break below the neckline, measured move down. Not likely, more likely, today's going to remain a sideways day, and bulls will buy around a 50% pullback. We're in the sell zone right here, but a stop entry short with a, whatever it is, 14, 15 bar bull micro channel is a bad idea. Too much risk of buyers at the low of the prior bar scaling in lower. If you're selling above bars, but even then, it's not a particularly strong trade when you have 15 bars up without a pullback. The biggest pullback in 15 bars has been 4 ticks. And that makes it very hard to make money selling, even with limit orders. High 1 buy, you can call it a high 2 buy if you want, double bottom 43. probably sellers not far above. And for the bulls, limit order bulls, they bought the first pullback in a whatever 16 or 17 bar bull micro channel, but we're probably not going a lot higher. This is probably a trading range. We have a bear leg, a bull leg, and probably not much higher before we try to test down to around the 36 low. Probably will be around a 50% pullback. If we go a little bit higher, this becomes a 50% pullback. Not a great buy above 48 unless you put a stop below 31 and are willing to scale in lower. Bears trying for a micro double top and a correction down to the 38 low, but with a small pullback channel for the past hour, it makes it a tough stop entry short. So I think difficult to do anything here unless you're willing to scale into longs below. Bears, as I said, I thought they would pull back below the 26 high. Limit order bears selling 26 high, selling more 1 point higher, probably will make money. The only way they make money is if it pulls back below the 26 high, which I think it will. I don't know if it'll do it here, but it probably will do it before too long. And those bears will buy. They'll buy back the shorts to take their profit on their entry 1 point above here. The bulls know that, and the bulls will buy at the 26 high as well. Other bulls will buy at the bottom of the channel, spike pullback channel. So the buy zone is around the 26 high and the 38 low. There's an adage on Wall Street to never short a dull market, and that's been the case over the past month. So many days have been sideways, 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 sideways. Yet we just keep working a little bit higher, a little bit higher, a little bit higher. Every now and then you get a spurt up. But all of these tight trading range days for the bulls are bull flags. We tried to break to the downside. It failed. And we're still on the reversal up from this day. This is that August high. We just dipped a little bit below it, and I think that's actually a problem for the bulls. Whenever you see this, okay, this is that day I just showed. This is the daily chart where you have a big tail on the bottom of the bar, and the tail goes below support, this August high, and gets near the moving average. That's usually not a very good reversal. And usually the market has to come back down lower. If this bar extended way below the moving average and this high, I think it would be a more reliable reversal. But when it just barely dips below and then quickly reverses up like that, in general, that test is not reliable and the market has to come down and test it again. Obviously, we're accelerating upward, but I still think we have to come down and test here before too long. Still always in long. Biggest pullback in a couple of hours is only 4 ticks, 5 ticks right here. So hard to make money selling, but we've also been sideways for 10 bars in a 5 tick range, so hard to make money buying also. Still always in long, so if we get any surprise move, any big move, up is slightly more likely than down. But to me, this is the sell zone. 16 high, 26 high of the day. Not much selling pressure, so a lot of the bears are not selling. You can see sellers are selling above. They sold above 42, unable to make money. They sold above 47, which is also above 16. They probably need maybe a 3-point stop, 4-point stop. Stop order bears, we have a double top 16, a second entry short 46. But when the limit order bears are not making money, it's usually too early to take a stop order short. You don't want to be selling with stops until you see proof that the limit order traders are making money selling. Usually, stop order bears are not going to make money until the limit order bears have made money. limit order bears usually make money earlier in a transition to a trading range than stop order bears. Biggest pullback 5 ticks in 20 bars now. So really difficult to make money selling even with limit orders. And therefore selling with a stop below 52, I think it's a mistake unless you're willing to use a wide stop and scale in. Still a small pullback bull trend, so stop entry selling below 54 or 55 I think is not very good. Limit order selling, as I said, selling above bars using a wide stop, 3 or 4 points, probably will be profitable. Limit order bulls above the 46 low made money. I think they'll be less willing to buy below 54 because that would be a second entry short, and we still have a spike pullback channel with 1, 2, 3 pushes up. Bulls would rather buy down here and not here. They did buy here for scalp, and they got their scalp, but now spike and channel, we're at the top of a trading range. I think more likely bulls will take profits and look to buy lower, and aggressive bears might sell, but I think selling with a stop in a 20 bar bear micro channel is a low probability sell. It's better to be selling above bars. Mostly sideways here. Bulls are hesitant to buy, they want to buy lower, and bears are hesitant to sell. They're selling above bars, but when it comes down to near their profit target and does not fill them, they buy back their shorts. So they sell the 52 high, comes down 4 ticks, does not fill them, they buy back their shorts, and the result is we drift upward in a tight channel. Sometimes you'll get an acceleration upward from there. Less likely we'll get a strong reversal from a lower high, major trend reversal. Bull trend, lower high. The bulls, an II, and a small pullback bull trend. Bears have not made money even with limit orders in over 2 hours, and therefore it's not worth selling unless you're going to be using a very wide stop. And for the bulls, they can see that we're in a bull channel, but it's fairly flat, and we're near the top of a trading range, and they'd rather buy lower. Some bulls will buy up here, hoping that we get a climactic rally from here, but most bulls want to buy a deeper pullback. When you have a small pullback bull trend, a lot of times there's a deeper pullback around 11:30. That is more likely if the entire day was a small pullback bull trend, which it's not. It's just been a small pullback bull trend for 26 bars here. It's still probably a bull egg in a trading range, but so far not a good sell signal. Remember I said the bears who sold the 26 high will probably make money. I still think that's true, but we may go higher first. Bears trying to get their reversal down to the 38 low. I still think the odds are we will fall below the 38 high. And the limit order bears who sold there and higher will make money. The bulls know that the bears need that, and they'll try to keep the gap open. But I think we'll get below there before the end of the day. Limit order bears, 52 high, finally made money. First time in 2 hours. Stop order bulls buying up here, 58. Even though it's a small pullback bull trend and it's trend resumption up after a strong rally here, I would rather buy deeper near the 38 low. For the bears is a lower high major trend reversal. If you want, you can call it a double top lower high 16. with the 16 high, but the odds are against a actual major reversal. Probably the best the bears will get is more trading range. They might get down to the 31 low. Remember at bar 11 I said we might have seen both the high and low of the day, and bar 18 same thing, that 90% chance we had seen either the low of the day or the high of the day, and that we might have seen both. The buy climax might be enough to prevent the bulls from buying enough to get above the 11 high. And 3 pushes up, but a small pullback bull trend. Difficult to make money selling. And the bulls are having a hard time making money buying as well. Still probably a bull leg in a trading range. Maybe 40% chance we get a bull breakout and the bears will get trapped. More likely we'll stay sideways. Maybe we'll dip down below the 38 high. The chance of selling off below 31 for a measured move down, probably 10 or 20% right now. Stop entry for the bears for the failed breakout, but a small pullback bull trend, and that makes selling with a stop a low probability bet. Top of a trading range day. Trading range days, typically you get swings lasting 2 or 3 hours. Here we got 1 hour up, hour and a half down, and now we're about 2 hours up, but not a clear top. Another small bull flag, but we're only 1 point higher than we were 2 hours ago, so very little movement. I think best choice is flat. Second best choice is long. Third best choice, selling new highs for scalps. But the bulls who sold the 54 high have not made money, and the bears only made money once in the past 2 hours. So not good trading. So far it looks similar to probably this day, strong rally, and got a new high late in the day, not much higher. So, we might, I don't know if it matters whether or not we get a new high. It's unlikely that it's going to go very far up or down. Hard to make money. Always in long, but this is the past couple of hours, 2 points. I am currently flat. We probably will get a brief 2-bar spurt. Up is more likely than down. It could be a bear reversal as well, but it's slightly more likely for the bulls. It's a tight trading range, but it's a tight bull channel and a small pullback bull trend, but it's really more of a tight trading range. And I think it's better to be flat. They're still selling at the highs, but it would just take one big bull bar to make them lose money. If one big bull bar, something like this, they'll have to cover because they'll run out of time. Limit order trading gets a little bit risky at the end of the day because you can run out of time and the market can simply drift upward against you. I would not buy up here. I would either be selling above bars or waiting for probably a breakout up or down. I still think this looks like a bull leg in a trading range, and we're near the top of the day, which means the top of the range. But, really a terrible stop entry short, because the pullbacks are all small. Now, the clock is running against the bulls. What happens to the bulls who bought the 65 high? They've lost money. And will bulls buy above 70? I would not. You can see we're at the trend line. But we get there by going sideways rather than down. I still think it's very difficult to do anything here. Bears made money selling above. Bulls, we're at the top of a range and therefore buying below bars, below 68, below 69, below 64. I think it's not a good strategy because we're at the top of a day-long trading range. So the bears, they got their scalp, but buying here, I would not do it. I think it's probably better to wait to see if we got to buy the close or sell the close finish. More likely, with the market being in a 2-point range now for over 2 hours, more likely we're simply going to go sideways. We're in that window when the market often has a buy the close or sell the close trend, 12:30, 12:35. With so little energy all day today, we had a little bit here, odds are we're probably not going to get a buy the close or sell the close trend. It'll probably stay mostly sideways for the remainder of the day. It makes it really, really hard to make money. Sometimes you can trade with limit orders in a tight trading range at the end of the day, but the range has been 2 points for the past hour, and I think it's really easy to lose money, very difficult to make money, and if you do make money, you make very little, and that is bad math for trading. Usually when the market's in a 2-point range, 3-point range, I just stop and wait to see if it breaks out of the range. Everybody wants to trade because trading is fun, but the goal is to make money, and the market makes it virtually impossible to make much money when it's doing this, and therefore it's better to save your money for times when the market's moving more. It's possible, as I said, that we might get one brief breakout up or down, 2 or 3 bars, but you have to be really quick. And there's also a certain amount of luck, because when the range is this tight, the odds of a reversal are higher than normal. So if you get the breakout, there's a higher probability than normal that even with a couple of good trend bars, it'll reverse. And you can see here 2 bull bars reversed up, 2 bull bars reversed down, 2 bear bars reversed up. Still holding above the moving average. The pullbacks are still small, so it's still a small pullback bull trend. If we are going to get a trend at the end of the day, up is more likely than down, but it's not much. And what's your goal? Are you looking for 4 points? That's not realistic. Are you planning to get out with 1 point? Well, where's your stop? Below 76, so you're risking 2 points to make 1 point. Is the probability 70 or 80%? It is not, and therefore it's not a good buy. And for the bears, can you sell right here? Let's say you can sell with a limit order 68 high. Well, how much are you risking? 1 point, 2 points, 3 points? You probably have to risk more than 1 point. And what's your goal? A 1 point scalp or a swing down? Probably a 1 point scalp. So if you're risking 1 point or more to make 1 point, is it 60% certain that you're going to make your 1 point before your stop is hit? I don't think so. And that means it's, I think, bad for the bulls and bears, even with limit order trading. The range is just too tight to allow traders to structure a trade. As I said, we might get a brief breakout, 1 or 2 bars up or down, but we're running out of time. And I think it'll be very difficult to trade with the breakout or against the breakout. Let's say you get a 1 bar rally, you need a follow-through bar. And let's say the follow-through bar is a doji, then you're not certain. So you buy the close of a bull breakout, sell the close of a bear breakout, and then you get a bad follow-through bar. You're probably going to lose at least a little bit of money. And if you get consecutive bull bars, that is a problem as well. If you got 2 bull bars closing on their highs like this, maybe the math is okay for a scalp. But I think the odds of making money as a bull or a bear for the rest of the day are small. Bear is trying for their trend reversal down from the top of a trading range today. outside down 74, but small body, big tail. They're trying to sell the close. Remember I said it's a spike pullback channel with 3 or 4 pushes up. Trading range days tend to try to gravitate toward the middle of the day. The range was here, so that would be a target, which is that gap. But again, really difficult to do anything right here. You know, if the bars were especially big, you know, 2, 3, 4 points tall, you know, I think it'd be easier to make money. But the bear body on 75 is just 3 ticks. One of my general rules, if it's sideways into 1245, it usually stays sideways until the end of the day. And therefore, I would do nothing here, even though you have a double bottom 70 and a small pullback bull trend. This increases the chances that if we get a bull breakout, it'll fail, just like we tried a couple times to get a bear breakout and it failed. There's that little pop. So the bulls have bought the double bottom if they're 1 point scalp. You know, it's possible that we can go up 3 or 4 points, but I think a lot of traders, if they did buy above 76, I did not, they would simply scalp out for 1 point and not hold, hoping for 3 or 4 points. And sometimes it will go up 3 or 4 points and they'll, you know, miss out on a big profit. However, I just think it's very difficult to make money when the market's like this, and it's very easy to lose money. So to me, the math is, it's too bad to take the trade. Anyway, good day for the bulls. You know, we're accelerating upward. Let me move this over here. Yeah, the market's accelerating upward on the daily chart. I don't know that we'll reach this measured move. We have a breakout test, a breakout point, measured move up. But there's nothing to short. I'm still holding puts and put spreads, and I probably will add if we start doing this. I'm holding January because I thought there was a reasonable chance that we could go up higher, so I wanted to have the puts expiring out several months. Weekly chart, we had an outside up last week, which is normally bullish, but the weekly chart is so overbought that it's less bullish than it might otherwise be. And monthly chart right now I think is amazing. This is now 12 months. Let me see, 4, 8. Yeah, this is the 12th month where every low is above the low of the prior month. And I don't believe that's ever happened in the 18 years of the E-mini, 19 years of the E-mini. In 1995, that's the strongest bull trend probably of the past, I don't know, 50, 60, 70 years. They had a 13 bar bull micro channel, and that was the strongest rally in my trading career over 30 years. And this is now 12, so one more bar, and this would be equal to the longest bull micro channel in history. Well, it's possible. It makes it unlikely that we're going to go up much more without a pullback. You know, theoretically, we never have to have a pullback. Theoretically, it never has to get near the moving average. It can stay above the moving average forever. But that has not been the history. You know, markets always have fundamental and technical things that happen that prevent it from doing the same thing forever. But no sign of a top. And even when we do get a top, probably the best the bears will get is something like this. You know, maybe, you know, one bar like that. But the downside is really small when you have a very tight bull channel like this, right? I kept trying to reverse, but everyone kept buying the pullbacks because when a channel is that tight, reversals are usually minimum, not too far in points and not too many bars, one bar, you know, one bar here, one bar, one bar. And that's probably going to be the same up here. You know, maybe 2 bars, 3 bars, here's 2 bars down, but unlikely to do something like this without first going sideways for 5 or 10 bars. So the downside risk over the next 6 months or so is probably very small. Yesterday, Friday, we had a rally and then a very tight range similar to what we had today, and that always makes you think about trend reversal down or trend resumption up. We had a little resumption up at the close, and then today's open we had trend resumption up. On first bar of the day is a doji bar, and it's are we always in long or short? Well, I always look to the left, and we're always in long, but that's not a reason enough to buy. And then the third bar is also a doji bar, but first 3 bars closed at or above the open. And then 4 or 5, I thought it became by the close. The bars were small, so we're probably not going to go up very far and for very long. But it's pretty common for the market to go up for 10 or 12 bars, about an hour on the open, and then go sideways for several hours. Here, we were basically sideways for most of the day. We went down a little first, but basically in a trading range. And I personally don't like it when I see the market doing this, because I know this is what's going to happen, that we're not going to have a lot of movement up or down, and it becomes very difficult to make money. So if you don't make much money early on, it's going to be hard to make money in the second half of the day. Anyway, for stop entry bulls, probably the first reasonable stop, maybe above 4 or 5, and then through here. Once we had that parabolic wedge buy climax, typically the rally stops for 5 or 10 bars, and sometimes it's the high for the day. And it was the high until bar 78, right at the 1 o'clock bar. Let me rephrase that. When you have a parabolic wedge, 40% chance you're going to get a reversal into a bear trend. 60% chance you're not. And a lot of times you'll get an endless pullback in a tight channel that just keeps going down, 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 down. And then you get a 2-bar breakout. If you get that, then you're probably in the process of having a bear trend. But without it, usually you're either going to stay sideways or you're going to go higher. And when you do go higher, you usually do not go a lot higher. Usually you get one more leg up. Like this. So parabolic wedge, pullback, and we got resumption up, and then it became a big trading range. And that's probably what's going to happen here. This is probably going to be a bull leg in a trading range, and we'll probably test back down here tomorrow or the next day. But when you see this on the daily chart, the odds of much down are really small. Usually the market has to go sideways for at least a few bars before you get any meaningful reversal. When it's this strongly up, you hear me talk about that all the time. I'll say, oh, that breakout looks strong enough so that there probably are buyers below the low of any bar, and the bulls will probably get at least a small second leg up. And that's true here. This is so strongly bullish on the daily chart that even if we get a bear bar tomorrow or the next day, the odds are this is strong enough up to get a second leg up, and that means that the reversal down will probably fail, and we'll come back up to this price a day or two after the reversal. So very little downside risk on the daily chart over the next few days, and very little risk on the monthly chart over the next 6 months. Anyway, so stop entry bulls you buy, and I said you could buy above 13, but I thought it was a big enough reversal down 12, so you have big up 10, big down 12, probably at least a couple legs sideways to down, possibly the high of the day. And then the legs down were not good. 17, 18, not particularly big, fairly big tail, 17 relative to the body size. So it looks like we're probably entering a trading range. The bulls tried to reverse on 24. If you want, you can call it a wedge bull flag or a spike in channel, spike, pullback, and then 3 little pushes down, but a bear body. 25 closing on its high. I think it's okay to take the buy, but when the channel down is that tight, usually you'll get at least a micro double bottom. And then the bulls had another reversal, 31. a doji bar, not a good reversal after a big bear bar. 30, not a good reversal after a very tight channel. 32 closed on its high. That is a better signal bar. Whenever you see that, where you don't have a good reversal, you don't have a good buy signal bar on the 5-minute chart, but then you get another bar right afterwards closing on its high. If you look at some random higher time frame chart, 6, 7, 10-minute chart, usually that high is a good buy signal bar. So let me take a look at the 6-minute chart. So if you're desperate to, 6-minute chart, not a great buy signal bar, similar to the 5, 7-minute chart. Okay, so you got a 2-bar reversal closing on its high. 10-minute chart, bull bar closing on its high, wedge 1, 2, 3 at the moving average. So 10-minute chart was a decent buy signal. So it's pretty common on the time frame that you're trading, any time frame, 3, 4, 5-minute, 10-minute, 15-minute. It's very common for a buy signal bar to not look all that great, 31, but then you get a bar or 2 or 3 later closing on its high, and that tells you that there's probably a pretty good buy signal bar on some higher time frame chart. Yes, the risk is higher buying above 32, but it's a reasonable swing buy. Is it a high enough probability for a scalp? No, the channel is so tight. So if you're buying 32, you're looking for a swing up. The odds were we would test down, but then we started to enter a small pullback bull trend, 38, 39, 40, 8, 10, 12, 15 bars without a pullback. And that made it unlikely that we were going to come down here. Instead, it was likely that we would either go sideways or continue up. And we did both. We went mostly sideways and a little bit up. Anyway, so stop entries above 32 if you want a swing, but chances are we were going to go sideways. Instead, we went up. And then through here, stop entries above 38, not great. Above 45, not great. Above 51, it's an I, but all small dojis, not great. And same with here, here, here. None of them was great, but if you were willing to use the swing stop, especially if you were willing to scale in, the math is okay. But even the traders who bought here or here, let's say you bought the 45 high, had to go up 6 ticks, you had to wait 23 bars, 24 bars, 2 hours to make 1 point. And time is a risk. Price is a risk, but the chart is both price and time is a risk. And waiting a lot of bars, I think, is exposing yourself to big risk. Every now and then you get some crazy news thing that comes out, and you can get a huge bar, and whatever stop you had can get hit, and you can get slippage. So that time is a risk as well. So, buying with a stop on a tight trading range and holding for 2 hours to make 1 point, I rarely would ever do that. When the market starts doing this, I'm buying below bars for a 1 point scalp. And even then, I have to hold a long time. And when it's a small pullback bull trend like this, biggest pullbacks 5 ticks, I know that at some point the bears are going to make a 1 point scalp, but I'm not going to short. If the biggest pullbacks are 5 ticks, 6 ticks, I rarely ever will take a short. Sometimes I will, if it's especially if it's early enough in the day and I can scale in and there's major resistance and there's strong selling earlier in the day, then I might take the short and scale in. But small pullback bull trend, pretty good rally here, not great selling here. I'm not willing to take the short, even though the bears did make money. It's easier to make money, looking to buy below bars. Not a lot of opportunities. Very, very easy to miss them. A lot of times they're very brief, but that was the choice. So this is not good stop entry trading. Buy the close, sell the close, probably on bar 5 or so, certainly bar 6, it's buy the close, 7, 8, 9, buy the close. And then you get a bigger bar, 10, and it's a third push up. I usually do not buy that close. And then for sell the close, I thought it never was a sell the close day. We never had, I thought if anything, you're doing the opposite. You're buying every big bear bar, bar 12, bar 28 close, bar 30 close, and even up here, buying bear closes made more sense than trying to sell bear closes. And then limit orders, while I thought there were sellers above 13, I thought we could easily simply go sideways, and I thought we were still always in long. So not really good math selling above bars, even though we traded down for 20 bars in here. But to me, we're getting bear bars followed by bull bars, and the bear bars are not all that big. Consecutive bear bars, but tail. Probably not going to become a bear trend. It's an endless pullback. If we do get a big bear breakout and a follow through bar, if we get that, or if we get that, then I'll sell. But until then, I assume the sell off, even if it lasts a lot of bars, is probably a bull flag, slightly more likely that will go up than down. So I don't sell until I see a strong pair of bear bars closing near their lows. Good question. What is the probability of the E-mini closing the gap this week? Made at 10:40 yesterday on the 5-minute chart. Okay, let me look at 10:40 Friday. I am not sure. You might be talking about the gap between this high and that low. Do I think it'll close this week? I don't know. I think the market is accelerating up in a parabolic buy climax, and I think it's going to come down here and close this gap and a whole bunch of gaps below. But what's the chance of it doing it this week? I don't know. We gapped up on the daily chart, the weekly chart, and the monthly chart today. But in the very first bar, we closed all of those gaps by one tick. And right now, it's just a lot of small pullback rally. A lot of buying, and we're getting occasional sell-offs, but even then, the bulls are aggressively buying them. So I think it's too early to be looking for gaps to close. We have a gap this low, that high. We have a gap this low, that high. Those gaps, I believe, will close, but it's possible that they don't close until the last week of the month. Have I ever traded the DAX? I have never traded the DAX. I've looked at DAX charts, but it's hard to get data. I think IB has DAX data, but I've never traded it. The DAX does trade very well. It looks like any other market, so it's a very good trading market. There are a lot of good indices around the world that trade very well. China, Singapore, Germany, England. Good question. Why is there a couple points difference in the US 500 price on the Forex platforms compared to the E-mini? I haven't looked at those charts, but a lot of it could be due to rollover. This is continuation contracts. Even if those charts, I would look at the contract that they're using. I'm assuming they're using December, because September has expired. But usually when there's a difference in price, or they might be using the cash index, they might not be using futures. But it's usually something like that. If you're looking, however, at an E-mini chart on some other exchange or some other platform, it has to be identical to this chart unless it's using a different month, like it might be using March. However, nobody is using March. So if your software vendor or your data vendor is using March, they are in a small group of traders. Right now, the E-mini uses, this. I remember when the E-mini first came out, actually back before the E-mini came out, when there was just S&P futures, it was really common to get bad prices. And, so you look at a price and say, that can't be right. And, I would call TradeStation or, whatever broker I had at the time and said that, your price is clearly wrong. And, for example, on the spider, let's say in the spider, let's say this tail instead of here was here, 3 points lower, 3%. This is not the spider. Let me put up the spider. But let's say on the spider, this price, instead of being here, it was 6 points or 10 points lower. And you look at the volume, and it was 100 contracts. And so it was a mistake. And I would call TradeStation, and they would totally insist that their price was right. That, in fact, the market did trade down 1% in the course of 1 second, and the sell-off lasted only 1 second, and there was only 100 shares of the ETF that traded. And it was just total nonsense. But they would, I don't know how they could insist that it was right, but they would totally insist, our data is right. And another common thing, even 10 years ago, 15 years ago, you'd have a price on your chart, and then at the end of the day, you look and say, wait a minute, they changed that price. And, that no longer happens. Now all the brokers get their price directly from the CME, the exchange, and they immediately transmit it, so everybody gets the same price all the time. I don't remember the last time when I saw a bad price on TradeStation or IB. I imagine it still occasionally happens, but I don't remember. It's been years since I can remember seeing it. But anyway, the discrepancy between what you see here on TradeStation and a Forex data provider means that the Forex data provider has something going on that's wrong. For example, another thing that used to be a big problem, 10, 20 years ago, there used to be two types of data, real-time data and delayed data. And, the chart would not say on the top, this is delayed data. But even TradeStation, if you didn't pay for each of the different exchanges, sometimes you could pay $10 to get delayed data on everything. And if you put up a chart on something that is not one of your real-time things, the chart would look just like this, except that the data is 10 minutes delayed. What you're seeing actually took place 10 minutes ago. And I'm wondering if your Forex data provider is using delayed data. And if so, you could be getting data that is 10 minutes old or an hour old. And even though the time at the bottom looks right, because you're getting the data tick by tick by tick, and, at this instant you're getting the data. However, it's data from 10 minutes ago, and you don't know that by looking at your chart. So that is something else that I would look at. So I would confirm that it's the December chart. This is the December chart here. It's the continuation contract, but now it's using December, and everybody trading the E-mini is doing that. However, so I would confirm with your broker that you're using the December contract, and then I would also confirm that the data is not delayed, that it's real-time data. And if he says yes, it's December, and if he says yes, it's real-time, not delayed, he's wrong. Okay? Ask to speak with somebody else, because it's impossible to have real-time data of the December contract and have a price that's different from what you see here. Okay, that's not going to happen. All right, so this is really fascinating. We're accelerating upward here in a parabolic buy climax, no sign of a top, but parabolic rallies usually end up reversing. And when you get a parabolic, let's say we get a parabolic wedge top, when you get a reversal with the buy climax, that does not mean a trend reversal. It usually means a big up, big down pause in the trend. And how far down will the pause be? Well, if it's a 5-minute chart, a daily chart, and you get a parabolic buy climax and a reversal, it'll be a pause on the daily chart, right? On the other hand, we have a buy climax going on on the higher time frame charts as well. So if you get a big breakout, 50 or 100 points over the next few weeks, and then it reverses down and closes near the low of the month, reversal here would be a pause here, but a pause here could be, the size of a bar. So if we go up 100 points, we can easily pull back for a bar the same size, 100 points or so, and it won't look like much of anything like that. It won't look like much of anything on the, here's the buy climax that reversed. On the monthly chart, it won't look like anything, but on the daily chart, it could look disastrous. This is a 20% correction on the daily chart, right? So, yes, you can get a buy climax and a pullback. This one here is what? This is probably close to a 20% correction as well. So, a buy climax on the daily chart, you expect maybe a few bars down, maybe the height of the buy climax, and, that might be 30 points, 40 points. But we also have buy climaxes on the weekly and monthly chart. And if we get a climactic reversal on the monthly chart, it could easily pull back, 5 or 10%. So, while this is bullish, it's musical chairs. As long as they keep playing the music, it goes up. But these are all momentum bulls. They're buying because it's going up. They're not buying because they think it's cheap. And if it stops going up, and if it starts going down a little bit, all of the bulls who are buying here will be very quick to exit. And that could lead to a very quick reversal. And that's how buy climaxes work. Traders, momentum bulls are buying late in a bull trend simply because it's going up. And as soon as it stops going up, they all sell quickly, and they're not going to look to buy again until the momentum up is strong. And that usually is going to be at least 10 bars and 2 legs on whatever time frame you're looking at. Also, one final point about the 5-minute chart. A lot of times when the daily chart looks like this, the 5-minute chart looks like this. You just sit there and it's doing nothing for hours, yet it's still going up a little bit higher. I talked about that earlier today. Excuse me. So as a day trader, you do not have a lot of opportunities, and you have relatively big risk. There's not much momentum up, and it's always looking like a bull leg in a trading range, and therefore you can get deep pullbacks. However, there always has to be a reason for someone to take the other side, and so it's never going to look all that easy. Yet it can just keep going up and up and up. So I don't know how much higher we go. I thought we might go to 25.20 or so, but right now it looks like we're going higher than that because there's no sign of a top on the daily chart, which means we probably have to go higher. There are other targets above. Here's the weekly chart. We tried to top out here. Instead, we broke out. So a measured move up based upon the height of that leg is 25.79. That's another magnet. Do I think we'll reach this trend line? Probably not. We're probably operating now with a flatter trend line, but we're right near the top of it. So we're very close to that. Okay, hope everybody has a good night.